Hello everybody, welcome to our next video in this inventory practice exercise series. In this video we are going to be covering the perpetual weighted average inventory costing method. So up to this point we've covered FIFO for both perpetual and periodic. We've covered LIFO individually for perpetual and periodic. And now we're going to have two videos covering the perpetual weighted average and the periodic weighted average method. Now remember, what we're doing here is a costing inventory exercise, which basically we use the method that the textbook problem gives us to identify how the cost is going to flow out of the inventory account and over to cost of goods sold. So with FIFO and LIFO, it's all about the order in which they flow. Either the first goes out first or the last goes out first. With weighted average, it's a little bit different because we're essentially going to be recreating the inventory layers. Now, again, when I use that term inventory layers, I'm just talking about these different rows of inventory cost. As we sell units, we have to figure out, well, which of these costs per unit are we going to use? And it's not always as simple as just one cost. Weighted average makes it a little bit more complicated because now it's not really going to be any of these individual costs. It's going to be an average, a weighted average of all of them based on the inventory you have at the time. Now, before we get into this, remember that the perpetual and periodic method, the two methods, it's all about when do we do the entry? When do we do the entry for the inventory cost? And when we do this calculation, basically. With perpetual, we're doing that entry every time we have a sale, and we're doing it based on the inventory that we know about at that time. With periodic, that we'll see in the next video, we're only doing the inventory costing entry at the very end based on all of the inventory for that entire period, in this case, that entire month. What I'll basically tell you is that the periodic weighted average method is arguably the easiest of all methods. The perpetual weighted average method, on the other hand, is a little bit more time consuming, a little bit trickier, certainly to document or to illustrate. So I'm going to show you a few different ways to do that. And then one last piece I wanted to mention, we have these different layers, but then we have sales in between. The sales are going to have the number of units sold and their sales price. The actual purchases, they're going to have a unit cost. You have to keep those two things separate. Pay close attention to that. So the first thing I wanted to do is, when you see this type of problem and you see the units, the unit cost, and then of course the sales price, sometimes it's easier at the very right, somewhere on the far right or wherever, to have a column adding everything up. So total costs and total sales, that's what I'll call this. And I'm just going to go through and multiply the number of units by the unit cost. And do the same thing for the sales. Obviously, some of those cells only have one column, not the other. So make sure you get the columns right. We'll do that last one. And we can do a grand total as well. And we're good to go here. So now we have some totals. So it's good to have that information, but what I'll also tell you, and we'll see in just a bit, is that it's going to be used for two of our questions. So we've already done the work for two of our questions with not a whole lot of work needed. Now let's go into the actual questions themselves. How many units were available for sale during the period based on this data set? So if we go over here, we can just go through and take a look at beginning inventory, add in the number of units purchased. We don't worry about the number of units sold yet. We just keep adding in the purchases and the beginning inventory, and we'll find that we had 560 units available for sale. Now the next question is how many units were indeed sold. Now we just have a few sales. We'll just add those three sales counts in. Keep in mind, this is just units. We're not dealing with costs or any dollar amount. It's just units. Number 3, how many units remained in ending inventory? If we had 560 and we sold 415, we apparently have 145 in ending inventory. You just subtract the two. So pretty quick answers to those questions. Number 4, what is the value of the goods available for sale throughout the period? Again, this is the value of all the goods that we have available for sale. Sometimes they'll just refer to this as what is the cost of goods available for sale. It's not the sales price. It's just the cost of all of those 560 units that we could have sold. The good thing is we already did this. This was our 6850 that we did in this calculation here. So I'm just going to reference that. What is the value of total sales throughout the period? We already did that one as well. That's 8935. And it makes sense that our sales exceed our costs. Now, even though we didn't sell all of the units, even if we did sell all the units, our sales is certainly going to be higher than our cost because we sell it at a higher price. The company needs to make a profit. So now we are getting into the trickier part with number 6 and 7, which what I'll actually tell you is these are kind of done at the same time. The idea here is that we apply whatever method we're using to move costs out of inventory and over to cost of goods sold. The one tip I'm going to tell you here is that this 6850, the cost of goods available for sale throughout the period, that has to be in one place or the other. It's either the amount sold or what's left is the amount that's in ending inventory. So when you add those two up, 6 and 7 together, you should end up getting 6850. Now that, I want to make another point here though. When you're dealing with rounding, which we may very well be dealing with here in the weighted average, and what I also want to do is I want to make sure we've got everything showing its full dollar amount. So there was some sense there. I did a formula, so that carried over the proper number. But in any case, I wanted to make sure that shows up here. So when we're doing rounding, even if these were even dollar amounts, if we divide it by X number of units, we may end up with 33 cents for a unit or whatever. So that rule that I'm saying, when we add 6 and 7 together, depending on how we round it, it may be off by $1 or $2, just depending on the situation. So not a big deal, but basically it should come very close to that. It all depends on how you round. So now the first thing we need to do, or one way to do this, one way I like to do this, is I like to copy all of the data set over here. In fact, what we can do, I'm going to copy this whole thing here to save us a little bit of time. I'm going to copy and paste that down here. Make sure my formula stayed. I'm going to call this ending inventory. Now there are a few things we're going to need to delete though. We don't need the sales price for this. So I'm going to delete all the sales entries, or if you want to just type that in. Again, I wanted to make sure my formulas were still there. We also don't need the sales rows. We're just dealing with costs of ending inventory. That's the name of this column or this section. Costs of ending inventory. Now I do want to get a grand total. That was that 6850 from up above. Right here. So now this method is the trickier one because it's, first of all, it's perpetual, so we have to do this every step of the way. By the way, I'm going to create another section called cost of goods sold. I'm going to put in a unit count and unit cost. And then we'll get a total there as well. So this is going to be a little bit different than the last videos that we had. And the reason is, I used to, in the other videos, I have a column here called from what layer. But for weighted average cost, it's not really coming from any given layer. It's going to be an average of the layers available at that time. So that'll make sense in just a second here. So this first one is the December 7th sale. And we have 125 units we're selling. So the trick here is, which unit cost do we use? On December 7th, we have to think about this for a second. This is perpetual, so we only know about those first two layers at this time. we really don't know anything about these layers yet for our December 7th sale. This is weighted average. So what we need to do here is create, I'm going to do this, running total units and then running total cost. Again, how you document this, how you illustrate it, it's up to you. But at this point in time, we have a total of 260 units, and the total cost is $29.43. And again, I'm going to just show that fully so we can see if it has any sense or not. And it does. So that's the running total number of units and the running total cost. Now we want to get a weighted average per unit, a cost per unit. In fact, I'll put that in there because that helps to explain which way you divide. Cost divided by units. Now I'm going to move this out a few more digits just to show you that it's not an even cent. And that's fine. It depends on if you type this in or if you use the formula. If you reference that actual number, it'll show up slightly different. It'll be rounded different way. Again, not a big deal. You just have to look at the instructions for your textbook problem to see what they're asking for, how they want it to round. So on the December 7th sale, this is all we know. We know that we have 260 units at $11.31.73 per unit. So I'm going to, just to get an exact amount, I'm just going to reference that unit cost. Well, you know what? I better not do that because I'm going to delete it. I'm going to put it out to 4 digits. So the total cost of that sale is $1,414.66. Now the challenge here is that we know what we're moving to cost of goods sold, but in the previous videos we talked about how we need to update ending inventory in order to end up with a final amount of ending inventory. Now there are a few different ways of doing this. One of the ways I like to do it is simply visualize the fact that we're now destroying these 2 layers of inventory and we're recreating them with a brand new layer of this weighted average cost. So I'm going to destroy this. Well, we need to remember that we have $11.31.73. That's what we need to do here. We had 260 units. We're taking away 125. So we basically have 135 units at $11.31.73. That's the information we need right now. Now I hard-coded those in on purpose. In fact, I'm going to hard-code this one in because what we're going to do is destroy these 2 layers, which will update this formula. So we're going to recreate it. 135 units at $11.3173. And I got to destroy this first layer. That's gone as well. Now notice that updated all of this, which is fine. We can delete all of this. The whole purpose of that was to get our brand new layer. Now we go on to the December 20th layer. Or sale, December 20th sale. Right off the bat, we know we're going to sell 140 units, so we might as well hard code that in. These 2 new layers are now available. The original new average layer plus these 2 additional layers are available by the time we do the December 20th sale. So again, what we need to do is create a running total units and a running total of the cost and get a weighted average cost per unit. Cost divided by units. Now again, I'm going to round this out a couple extra digits just so we get a more accurate number. And what I'm going to do now that we've got this, I'm going to hard code it in, $12.14.44. I'm going to hard code everything actually, because we want this to stay. We don't want it to update when we change these layers, because remember, we're going to have a brand new layer now after we do this sale. This unit cost is going to be $12.14.44. So the total cost for that is going to be $1,700.2166 if you round it. So what that means now is that we had 340 units at that average cost. We just used up 140 units of that average cost. So I'm going to subtract the two. Whoops. We're going to have 200 at 12.1444. So that's what's left. I'm going to delete all this stuff out now. And now we have another new layer, and I'm just going to update this original one and destroy these other two layers. 200 units at 12.1444. Finally, we have the December 30th sale, which now every layer is opened. We know about them all. We are trying to sell 150 units here. And again, that's gone. We don't need that anymore. So we need to know at this point, what is the total number of units available? What is the total cost, which is it's given to us here already, and then the cost per unit. I'm going to hard code those in again and round it out a couple more digits. So 12.6610. That becomes our cost per unit. And we can get the new cost there as well. Grand total of these three costs is $5,014.03. We don't really need this stuff anymore, except to, I guess we better leave it for 1 second. We had 295. We're selling 150. So now we have 145 units at $12.66. So again, that we have to destroy this layer. And we can get rid of this whole thing now. This is the ending inventory. 145 units at $12.66 gives us $18.36. And all of these three sales, which we had to do individually, that gives us $5,014.03. So grand total inventory, grand total cost of goods sold. And we can just type them in up here. I'm going to format them so they look proper. Now, remember the rule I said earlier is that generally 6 and 7 should equal your total of goods available for sale, because the goods have to be somewhere. They've either been sold or they're remaining in ending inventory. Just as a double check here, let's add these two together. Sure enough, we get 68.50, which again, it might be slightly rounded. There were 3 cents down here. That's fine. That ties out to this 68.50. So we are good to go for perpetual weighted average. Now, this is the trickiest one, just in how you illustrate it. There are plenty of different ways to do this. In fact, sometimes your problems will have formats or your instructors will require a certain way. I'm just showing you the mechanics of how we get there, how we have to continually update ending inventory to reflect the new weighted averages, whereas each sale will have its own weighted average locked in. It was the weighted average at that time. That doesn't update. The next sale might have a different weighted average, but each individual sale has to keep its weighted average. When we get to periodic weighted average, we'll see that it's an easier method. You do the entry once based on one weighted average cost, much easier to document, but you have to know both. So hopefully this has helped to clarify how to do this method. I thank you for your time, and I will talk to you in our next discussion. Have a good one.